You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
Hey, everybody. Welcome to the show where we try to make money make more sense than a lot of the stuff people are doing. And you can call us if you need some help with your money at 855-935-TALK, 855-935-8255. I'm Don. That's Tom. Welcome to the show. I'm a brave soul. I waded
doing the show with me every week.
Yeah, well, that too.
Sorry.
I waded into the literal cesspool that is Wall Street Bets on Reddit. It takes, and you know, I've used bad words. I have. I try not to use them on the radio, but my goodness, these kids have some potty mouths. They're on Wall Street Bets, but I'm not going to say any of that. But I didn't know about there's a thing called paper hands or diamond hands.
Diamond hands, I do know.
Diamond hands. Well, finally, after about a week, some people on this board are starting to admit they have paper hands, and they're selling out at a loss.
Yeah.
Diamond hands mean you hang in there.
Yeah, forever. Yeah, you're not letting go.
Here's one guy who says, get this, still holding, and he has diamond hands, you only lose if you sell.
Wait,
no,
who said that?
You've actually already lost, sir. You've lost. There's one guy up here who is down $21,000. This is his whole portfolio. His whole portfolio is BlackBerry and GameStop.
That is a value play if I've ever heard of it. So we're talking about buying individual equities. We're talking about buying them speculatively completely. No one's ever looking at the earnings. No one's ever looking at the business model. No one's looking at any of the what they used to call fundamentals of the stock. None whatsoever. It's all about trading.
These stocks have no fundamentals.
They don't have any fundamentals. But here's the other part.
Yeah.
Here's a guy that was doing all that, and then guess what just showed up? It's 34 pages, and it's generally unwanted. It's your 1099.
Oh, no, yeah.
He got his statement like, what, 30? Oh, I did that. Oh, I did that. That was. So now he's trying to figure out how to do his tax. He's going to have to hire somebody to do his taxes because it's so complicated.
Well, and the fact of the matter is, if you're one of the lucky ones who bought GameStop low and sold it near that $300, $400 peak.
Yeah, I think it was 400. Yeah.
You have an incredible gain. Good. But you have an incredible gain that is going to be taxed as ordinary income. And there ain't no way around that unless you have
you have a partner now, too. Called the federal government. Yeah. Glad to be involved.
Anyway, so update on GameStop. Aren't you glad you didn't buy it in the 300s?
Where are we?
It is now and in after hours trading, it's up a little bit from Friday.
Oh, good. Thank goodness.
$62 a share, up from about 61.
Oh, fantastic. Well, I'll take that buck every day.
And of course, these guys, they're hanging in there because they know that this is just a temporary downturn.
Those stonks are going to hang in there. I know
we call that dumb money, ladies and gentlemen. Dumb money. 855-935-TALK is our number. Give us a call. Hey, Brent, welcome to Talking Real Money.
Speaking of hanging in there, thanks, Brent.
Yeah, thanks a million for taking my call. I've got a very unusual situation. I don't know if you've ever encountered this. I have a relationship with a woman in Tampa, Super Bowl Bay City, Tampa Bay. Okay.
Mm-hmm. Mm-hmm.
I'm 70 years old. She's 32. Okay.
Mm-hmm. Okay.
Her father died in a construction accident within the last year. Okay.
Okay.
And I knew it. And he set aside in his account, which I've seen online, he has $5 million fluid, which he's giving to her. And she's in the process of, negotiating the inheritance as we speak. and she has no other family members. Period. Nobody. Just her.
Okay.
She's 32.
Yeah.
Now, she's extremely attractive. She's a 10, physically. And I'm across the country. She's in Tampa Bay. And I don't want anybody to take advantage of her, because of her beauty, and her wealth, sudden wealth.
Okay. So what's your question?
As an attorney,
Yeah, what do you want to know?
well, can you guys help her in Florida? I trust you guys.
Of
I'm here
course.
in Washington and the Seattle area.
Yes, we work with people in Florida.
We work with people all over the country. Heck, I live an hour and a half from Tampa. Have her call the office. The 800 number at the office will always have an advisor help
Give
anybody.
him the number, because we don't do that very often.
800-386-3004, 800-386-3004, or just have her set up an appointment online. She'll speak with one of our advisors. We will help her for free, for nothing, and try to keep her from being taken advantage of.
Talking real money.
Now everyone can meet the retirement of their dreams at Retire Meet America 2021 online. Sign up now for free at retiremeet.com. That's retiremeet.com.
For your real life and real future, Tom and Don are talking real money.
All right, we got to stop. We just need to stop. The breaks are more when the breaks are more fun than the show.
We should be recording those, playing them back.
We were trying to figure out what a diversified crawl space was. Okay, but before that, and I'm trying to think of a way to do this tactfully.
Yeah.
Excuse me.
You're talking about the previous caller.
Yeah, talking about Brent, previous caller.
Yeah.
And I do want to take Brent at 100% face value. I do. That's my inclination. But being the skeptic, even, shall we say, cynic that I am, something occurred to me, and I just want to get it out there.
Whatever you're going to say, you may as well just say it.
I have heard of stories of attractive young women hooking up with older guys, telling them big stories about wealth and running away together and having this great life. Yeah. But just to finish probating the estate, I only need $20,000.
Yeah.
Can you, and we're going to, after this, we're going to be set. Brent, just want you to be careful. That's all.
Yeah. Okay. That's fair.
I'm really thinking, I'm looking out for you. I'm just thinking. And the other thing is Tom said, if she's a 10, he gets her. Sorry.
Yeah, why put the 10 thing in there? That's kind of an odd twist to the story.
There's a lot of twists. I thought that.
All I could think of was multi-generational vaccine thing, but I guess that's not right either.
What?
So
you thought it was going to get you the vaccine?
Well, no, because he said he was 70-something and she's 30-something.
So she can get the vaccine?
Apply for the multi-generation thing. That's a bad joke, but that's what my mind went.
855.
No, but to finish the thought. We will be glad to take a call from her to help her.
Yes.
We were joking around there. I'll be glad. Anybody, but yes. Especially if he feels she's going to be taking advantage. We don't want anybody taking advantage of. So
we try to avoid that at all costs. That's why we do this silly show.
Enough said there.
855-935-TALK. Call us. We'll try and help you avoid being ripped off.
10 or not.
Yeah, you can be a 3.5. Just really, we don't care. All right. Now, Barbara, you're up next. Welcome to Talking Real Money. Hi, Barbara.
Return to normalcy.
Hi, Tom and Don. You guys sure have a lot of fun.
Thanks.
My question is about I-bonds. And my sister, who is almost 81, became a widow about a year ago. She has no kids. She has quite a few I-bonds, but the names on them are hers and her deceased husband. Mm-hmm. She has nieces and nephews. She's well set otherwise financially. She was wondering if, what does she do with them? Can she get another name on them? Or can she give them like to a niece and nephew, and if they sign the back, then do they pay the tax on it? Can you give me any information?
Well, no,
about that?
Because they are in both names in joint tenancy, then the I-bonds have to be replated if they are still earning interest. They can be redeemed at a bank, but what will be needed will be a certified copy of the death certificate, or they can be reissued. But again, that will require a certified copy of the death certificate.
So they could be reissued in another name. I think that's what she's asking. Is that correct or not?
Or another. I mean, they have her name on them. Could she put like a niece or nephew?
Yeah.
Or
That's what.
I would assume they can either that or you can get new ones. But I would assume you can replate them if they're still active.
Now, what do you mean by replate? Is that sending them
change
back?
the name on it? Change the name on it to
just the name on the front.
whomever. Because
How does she go about doing that?
That would be done at a national bank.
Oh, a national bank can do
Bank
it.
of America, Wells Fargo, somebody. Yeah,
Not at a credit union.
Honolulu.
There'll be a bank.
They've got them there.
Yeah, they're part of the country.
I guess the only question is today: is it hard to get into a bank? But you can still do it.
So she doesn't have to send them back to the Treasury Department. She can go to a national bank.
Well, that used to be, again, this was many years ago. Let me look and see if they can still be redeemed at banks.
By the way, if she's going to send them to anybody, please send them certified in some way or overnight or something like that, because I find people mailing checks.
I think they can even be done at credit unions. Yeah, they can even be done at credit unions.
I would do them in person, personally.
Yeah, it's right here. I'm looking at the Treasury Direct website. You simply take them to your local bank, period.
Don't forget the death certificate, though, especially
proof of identity, certified death certificate. I don't know if they can be transferred, but I think so. There's a form you can fill out that's signature guaranteed that I do believe you can use. I'm not 100% sure, but I'm pretty darn sure. You can issue them. Let me just double check one other place.
And again, one other thing, Barbara, that I was just mentioning is before you go to the bank, call to make sure that their doors are open and they're letting people in, because that has been a bit in flux since last March or April.
The only trick is there are taxes due and you transfer it to somebody else, you're going to owe the taxes.
I was wondering about that. It's going to be pretty minimal with an I-bond, but yeah.
Yeah. So yes, you can do that. Do it at a national bank. Just have her go to her local branch and they will help her out. I betcha. Thanks for the call. 855-935-TALK. That's our phone number. And Craig, you're next. Welcome to the show.
Howdy, Craig.
Yeah, thanks. How you doing?
Good.
Listen to you guys quite often, and I always thought I wanted to call in and ask you about an outfit that we're invested in, my wife and I. And she's more aggressive than I am. I'm 72 and she's 63. And it's with Charles Schwab. Just your thoughts on that company?
Well, we like Schwab.
We love Schwab as a custodian. I'm not as much in favor of them as a asset manager. I'll put it that way.
What is the money invested in with Schwab?
It's a variety of things, and at times they change it. It's just that all I know is that I'm less aggressive than she is, and I'm just wondering.
So Schwab is your investment advisor, correct?
Yes, they handle our money.
Okay, so you're paying them a fee to manage your assets.
Well, that's what I'm curious about, because I never see a fee charged.
Well, I mean, you'd see it generally quarterly. It might be hard to find in some. I mean, some people make this transparent, some people do not. And then I worry about what Don was getting at is what the products they're using are, right? Because if you just walked into a Charles Schwab branch and said, "Hey, I've got all this money to manage," you could get a completely different experience from one representative than another. That's another one of my challenges with the brokerage industry, if you will. So that troubles me a bit. Again, Schwab as a broker dealer type of arrangement, even RIA, is not a place I would start. I'd rather have somebody smaller. I'd rather have somebody who has a specific strategy. And by the way, the fact that your wife's more aggressive than you wouldn't have anything to do with it. The bottom line would be Charles Schwab would not be the place I would start for that kind of relationship. We use Charles Schwab as a custodian. They're not recommending products. We don't use them for that reason.
Yeah, and here's the deal with Schwab. They either do brokerage account where you just tell them what to buy, but if they manage your money, they charge like 0.8% to manage your money. That's a fee that you should see somewhere. I would really, without seeing the whole account, it would be very hard to say whether they're doing a good job or a bad job. But overall, as a custodian, Schwab's an excellent custodian. Thanks for the call, 855-935-TALK.
Tom and Don are talking real money.
Our biggest event of the year, Retire Meet America 2021, is now available to everyone in the country, and it's absolutely free. Sign up now at retiremeet.com, retiremeet.com.
Your guides to a really great financial future. Tom and Don are talking real money.
We try to make it really, really easy to ask us questions and get answers to your nagging financial issues. So you can call us at 855-935-TALK during the show, which is noon to 2 Pacific time. Or you can call us at that same number, 855-935-TALK, anytime and leave your question. Or you can go to talkingrealmoney.com and just fill out the contact form and send us a question, kind of like this one. Subject: Roth conversion and estimated tax payment timing during a year. Yeah, you're not excited about this one, I can tell.
Yeah, no, I'm not, but go ahead. All the fun just went out of the show.
All the fun left. I wanted to convert $50,000 from my traditional IRA to my Roth IRA. Okay?
Yeah.
I have the money in a taxable account to pay the federal and state taxes that will be due. From a tax filing perspective, with the respect to the safe harbor, is it better to split the conversion into 4 smaller quarterly conversions and pay the estimated tax due each quarter, or just convert the entire amount at the end of the year and make the one-time tax payment in the fourth quarter? If I opted to do the $50,000 in the first quarter, would I have to pay the entire tax due in the first quarter, or can I split it into estimated quarterly installments? You can make quarterly installments. You can make
yes, you can.
You can make quarterly payments. Yes, you absolutely can. Even if you did it at the beginning of the year, I'd lean toward just doing it.
Yeah, because when you think through, if you do it and then the money's in Roth and then it starts the growth tax free now rather than 3 years from now, you should be ahead.
You should.
If you have the money to pay the tax, pay the tax.
You already have it. It's there.
You're overthinking it.
Yeah. I mean, you can make the payment in 4 quarterly installments because you have to make, if you're going to have money due without getting a penalty, you have to make quarterly estimated.
And one other thing to think about would be if you're going to do the 50 and you add that to your income, if that moves you to a higher bracket, that's another thing
that is important to consider.
Because then you're going to pay a much higher percentage of the conversion.
Which, like we said to a previous question in another podcast or the previous hour, that's why they invented lawyers. Well, this is why they invented accountants.
The full accountant program. Yeah, no, I mean, that's, again, if it wasn't going to boot you to a higher tax bracket and you had the money to pay the tax, I would do it now, get it over with. Yes.
Yeah,
correct.
I would just go ahead and do it. It's so much better to do it now.
By the way, I still think, and I think I said this in the podcast, this is one of the most overrated moves in the world. I think it is, because you have all these people who are like 60. Oh, no, do that. Like, so you just want to pay a lot of tax now so that your heirs get left tax-free money. Yeah. Why? I leave anything for my kids. Sorry, kids. You pay the tax. That's tough. You got free money. Why are you paying? I think it's silly.
Yeah, I think people miss that whole point. This is free money.
No.
Free.
I think if you're younger, no brainer for the conversion. But once you start getting 55,
here, let me
60,
do this one real quick because this one won't take long at all. It's a long.
Is it more fun than the last one?
Well, it's fun in that I can talk about something I'm going to do in the future.
I don't want fun today, apparently.
This person's been a Vanguard investor for many years now. He said in the past he just called them and he would get help. And now he says he's on hold for an hour, or the call drops, and he's just concerned about the future if he needs immediate assistance. And the reason
I think you answered this right last time. The answer is, number one, most of these companies, this is one reason to consider, by the way, using a smaller, more personable firm, because there you have somebody to call and reach somebody. Number two, most firms are moving online. They don't, just think if you need help with almost anything else, you got to go to your computer to do it. Seriously, who do you call anymore?
I've got a web host for my personal podcast, my Lit Reading and Rita Stories podcast. Their customer service is based in Italy. And if I write them, and I can only email, and if I email them, they respond while I'm asleep. And then when I respond to their response, I have to wait another full day.
Well, this is Italy. So, lovely country, but don't do business there. Anyway, no, the point of the matter is that's where the world's headed. Vanguard has grown very quickly the last few years. And remember, Vanguard is a not-for-profit business. They can only add people as the money comes in because each fund has to pay for itself. It's kind of tricky.
Yeah,
in a lot of
and they're
ways.
owned by the shareholders, so it will be your money that will increase that support. But I just wanted to note, I have a call in to media relations at Vanguard, and I've heard back. We're going to discuss this and talk about what's being done at Vanguard to alleviate this problem. So I'm actually going to try and address it as best I can.
Tom and Don are talking real money.
Retire Meet has gone both national and virtual. Join Tom and me along with a host of other retirement experts at Retire Meet America 2021. Reserve your place now at retiremeet.com, retiremeet.com.
Reality radio for a really great future. We're talking real money.
From feast to famine here on Talking Real Money. We had so many calls, and now we have none. So what a wonderful opportunity for you to give us a call at 855-935-TALK, 855-935-8255. I'm Don McDonald. That's Tom Cock. We're here every Saturday, except we won't be here live on the 20th.
What?
I'm sorry. We're doing Retire Meet.
Oh, come on.
Unless you want to let somebody else run the show. Unless you want to let somebody else run Retire Meet.
Not with 1,500 of our closest friends.
Yeah, we're gonna do a best of show. We've done.
We get somebody else to host it.
Do you know how many best ofs we've done?
No. It's like one or two.
One.
Yeah, it's not very many in a lot of years. Yeah, it kind of says something sad about our lives too.
We have no weekend life.
I know.
We're a couple of old guys who just sit around and talk to each other on the radio. 855-935-TALK, 855-935-8255, and Scott has a question.
Scott.
Yes.
Hi, Scott.
How you guys doing?
Up? Good.
Hey, I am considering changing employment, and I need to figure out what to do with the accounts that I have currently at my employer, or the account, I should say. With that money and how it rolls, I work for a municipal government, and I'm in the MEBT program. And apparently, I have 90 days to move it once I separate employment.
And where are you going to work?
Private
I'm
sector?
not actually even sure yet, but.
Oh, okay.
Yeah, I mean, if you had a new retirement plan to roll it to, you could move it there. But yeah, go ahead.
I'm kind of actually looking for something that's not necessarily attached to my workplace.
You want to roll over to an IRA,
individual retirement account,
or some such.
Yeah, you can do that with an MEBT. You can move it into an IRA. It's a qualified plan.
Now, can you combine, because I have a couple of other accounts, and do all of them? So I have, and I guess the phrase, you don't want to put everything in one basket, but I would like to have something where I don't have like 18 different, bank statements coming once a day.
Oh, yeah, no, you just want one IRA.
Let's go back to that statement you just made. That refers to putting it all in GameStop, AMC, Tesla, or something like that. That does not refer to having all the money at one custodian, for example. You could go to Schwab or Vanguard, open an individual retirement account. Mm-hmm. You could move all of those old accounts into one, which we'd highly recommend, and then either self-manage it or manage it on your own. That's not putting all your eggs in one basket.
Mm-mm.
Now, is that something I've heard the term the push versus pull? Is that something you just call Vanguard and say, "Hey, here's where the money is"?
Yep, it's a
people to do all that.
MEBT is a 401k basically.
Yeah, right.
And this is done
by municipalities
all the time. This is done all the time. Vanguard, Schwab, Fidelity, all of them are familiar with the concept and can make this happen, usually painlessly. Now, some 401k custodians, for some reason, require that they send you a check.
Yeah, everybody does this differently, sadly. There isn't one way.
But they can at least get the process started. And if you go to TalkingRealMoney.com, do two things. One, take our risk quiz. Absolutely first. Then go to TalkingRealMoney.com and scroll down. You'll see an article about 3 funds. Use a combination of those 3 funds at Schwab, Fidelity, or Vanguard. That will get you a 3-fund portfolio with about 13,000 stocks in it and a whole bunch of bonds. And then you will certainly not have all your eggs in one basket.
No, and my only caveat to all of this is when you take the money out of a retirement, a company, ERISA type plan, and you move it over to an individual retirement account, it's the Wild West. In other words, a lot of bad things could happen to you at an IRA. You got to know what you're doing. You got to take care of your money. Don just gave you a 3-fund portfolio. And if you can't do it on your own, you need to find somebody, a full-time 100% fiduciary that will take care of you properly. Because I do worry when people roll things over and they don't realize they could be sold into a lot of bad investments.
The article is called 3 Funds at 3 Groups. It's you just scroll down on the homepage at TalkingRealMoney.com and you'll find it along with lots of other good stuff. Give us a call, 855-935-TALK.
Tom and Don are talking real money.
Learn about estate planning, Medicare, Social Security, senior housing, investing for retirement, generating income in retirement, and protecting yourself from consumer scams, along with a special keynote duo, Paul Merriman and David Booth, the founder of Dimensional Fund Advisors. Reserve your free place now at retiremeet.com, retiremeet.com.
For your real life and real future, Tom and Don are talking real money.
One of those things we just can't help doing. We just sit around and talk about real money. We do it so often that I don't think we can think about anything else. It's all we think about. It's what we live. It's what we breathe. It's what we dream. It's us.
No, we'll be thinking about football tomorrow. It's a Super Bowl.
Super Bowl.
It won't be money related.
Super Bowl. I haven't had a beer in like...
I've had a beer this year.
6 or 8 weeks. Yeah. I don't think I've had one this year.
I had one drink earlier.
I bought a 6-pack of beer for the game tomorrow. Ooh, and I'm making up some chicken nachos and some wings.
And by the way, tomorrow will be the first game I've been on the soccer field as a referee in 10.5 months. That's also tomorrow.
Wow. You may not be there for the football game. I don't know. Not looking good. 855-935-TALK is our number, 855-935-8255. We want to help you manage money, and we want to help you avoid doing dumb things, too. For example, I bet you have heard of the ARK Innovation ETF. Come on. You know you have. This is the hottest mutual fund, or the hottest ETF, exchange-traded fund, in America right now, ladies and gentlemen.
Well, that's because since it came out, and the ticker is ARKK. ARKK. It's one ARK that I think could get shipwrecked. But since it came out in 2014, that was too easy. It's up almost 40% a year. 40% a year. That's the part.
I've got one. Just say no to this ARK.
Look at you. At the end of last March, the ARK carried 11.4 billion, like that, carried 11. And now it is swollen 2 by 2 to $58 billion. So it's gotten quite a bit bigger. Wow. And, by the way, it's one of the 5 ETFs to watch. I noticed this in Bloomberg Business Week that came out recently.
You notice they said one of the 5 ETFs to watch. You can watch it. It's fun to watch. Don't buy it.
Yeah.
It's fun to watch.
By the way, one other one they did mention is VTI, the Vanguard Total Stock Market ETF.
Okay. That one.
We think you should own the VT, the whole thing, but that's a whole other
VTI is the international.
It says VTI, that's total U.S. stock. I don't know. I was just telling the VT, but anyway.
VTI. Oh, yeah, that's the total U.S. That's the total U.S.
Yeah, so why not own this? The ARK, it's floating, it's moving right along, and it's doing great, Don. Why wouldn't I put my money in this?
I'm telling you, this ARK is floating faster than the tide is rising.
Why not?
It's up 100. In 2020, it was up 152%. Wow. But here's why. 11% of its portfolio is in Tesla. This is
which had a pretty good year.
Buying a This is like trying to buy your own stocks. This portfolio only has 43 stocks or 47 stocks in it. And 5 of them make up over 30% of the portfolio.
5 of them make up 30. But here's the number that makes me more nervous, actually, out of that.
Okay.
Almost 44% of ARC's total equity holdings, this is in all their funds, own a tenth of the stocks that they own 10% or more of the companies they own. In other words, they are the majority shareholder of those firms in a big way. So let's just assume that Tesla finds out tomorrow that the batteries start melting or whatever goes wrong, right? And you know that you own this exchange traded fund and you want your money, which you can get very quickly with an exchange traded fund, right? Click, it's gone. Now they have to start selling Tesla, a lot of it, because they hold such a massive amount of that particular company. Mm-hmm. They got to have a liquidity event here because they got to start selling off this. And I think the quote from Jason Zweig today was, liquidity is only there when you don't need it. So that's a good quote. I mean, the fact is, that makes me nervous, that concentration. Right. Yeah, exactly. As it goes down, I'm using the wrong tense there, as it went down, we know it will. I find this very risky. Concentrated portfolios make me extremely nervous. And again, if the redemption started coming in, the idea that they would have to sell a lot of these stocks. And by the way, the manager, a woman named Kathy Wood, says not to worry as all these billions have come in. I'm diversifying. Wow, this doesn't sound very diversified to me.
Well, but when you have more than one stock, I guess for her is diversification. I mean, she's got stocks in here now one of the things you use to judge the value of a stock is a thing called price earnings ratio or PE ratio. She has stocks in this portfolio that are trading at ridiculous numbers. She has like Zillow. Zillow has no earnings whatsoever. Roku, no earnings. Teladoc, no earnings. These are really, really risky. And this ETF, this is the other thing. We talk about getting things that are low cost. ETFs tend to be cheap, very cheap. This one for an ETF is very expensive, 0.75% per year.
So what we'd say in the industry, 75 basis points. Instead, you can go own the Vanguard Total World Stock Index, VT. I always forget. So 15 basis points, 16.
It's VT up right now.
Where you own thousands of companies. You're not making picks on a particular sector.
VT is 0.08%.
Pardon me,
or
8 basis points. Yeah, 1/10.
The fees, and the VT portfolio is made up of how many? I forget. I got to look.
I think it's 9,000 securities, 8,800
securities.
Yeah. So it's a lot of stocks. This is a bet. It worked out for a short period of time.
With VT, you do own Tesla, but Tesla is 0.8 of VT, whereas Tesla is 11%. It's 0.8% of VT, but 11% of ARC. Now, don't you think? You may love Tesla. And I think Tesla opened the door.
You're a Musk guy. You're a Musky fellow, I got to say.
I love SpaceX. I love what he's done. I love the fact that he has overcome so many roadblocks and he's done things that people said couldn't be done. I love that kind of stuff. But I got to tell you, when you've got General Motors and Ford now basically saying we are going to go almost totally electric, then you know that Tesla is going to have a run for its money in the future.
Well, but they will be part of the new ARC Space Exploration ETF, which the prospectus has already been filed on that one about a month ago. So I'm imagining that will go public very soon. The ARC Space Exploration Exchange Traded Fund. Let's hope your returns are sky high on that one.
Ladies and gentlemen, please save me. It's so
I see a flag being waved there. I'm seeing.
I give up.
You said it. Wait, whoa! Don't set the building on fire.
Dad joke boy. And there are no dad joke referees in America. Oh, by the way, I did look at that when I looked at that ARC portfolio. Like you look at the Vanguard Total World Stock Index, and it is large company blend. It
has a
half value.
Smidge of value.
It's about it shows Morningstar shows it about half value and about half growth.
Okay.
It leans a little more heavily toward growth. Just a little.
And it's going to lean more U.S. too, by the way.
Yes, it does lean more U.S. It's 56% U.S., but the ARK, ARKK, is off the charts to the growth side. It's large company, mid company, but growth heavy, like off the charts growth heavy. And when value stocks eventually come back into favor, you see those kinds of
They
funds
have been coming back into favor recently.
Yeah. Oh, yeah. Maybe. Remember, 24 hours a day, you can call us at 855-935-TALK. You can also leave questions at TalkingRealMoney.com, and you can also listen to our podcast there, too.
Tom and Don are talking real money.
A second opinion could save your life either physically or fiscally. Let one of our Vestory advisors help you save your future at Vestory.com, Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Well, finally, there's some good news after, it's going to be 7 years now. After 7 years, Tom has finally decided that Retire Meet is worth doing. And this year, it's all virtual, right, Tom?
It is indeed all virtual. You've got speakers from 8 in the morning till 1 o'clock in the afternoon.
Pacific time.
Includes Don, Pacific time. Thank you. Myself. Paul Merriman, David Booth, Herb Weisbaum, etc. A lot of great people, a lot of great information. RetireMeet.com. You got to join us.
Yeah, and it's free. It's really, truly free this year because you got to buy your own sandwich. But hey, it's a small price to pay for this great education. So grab a sandwich or grab a cup of coffee and a roll, hang out in your PJs, and sign up now at RetireMeet.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.